Welcome to our channel on accounting lessons with worked out problems. Brought to you by an experienced accounting professor with a CPA. We have videos on all topics of introductory financial accounting. Our focus is on step-by-step illustration of a problem, worked out on a whiteboard. Each topic also reviews concepts at the end if you need to brush up. Please do not forget to subscribe. The topic on owner's equity/shareholders equity is illustrated in two separate videos, namely 1. Stock issue and 2. Dividend and earnings per share. Each video also discusses the concepts after the illustration. This second video is an illustration of accounting of dividends and earning per share. Take a moment to review the problem description. You will find it helpful to have a printout of the problem for reference while the problem is being worked out on the whiteboard. Let us begin.
The company can pay dividends in form of the cash. That means the shareholders will get the dividends in cash. Or sometimes the company may want to preserve the cash and instead will pay additional shares to the existing stockholders as a dividend. So first let's go over the cash dividend. So when the company is paying a cash dividend, remember, it's coming out of your retained earnings account if you remember your early chapters, okay? All dividends are subtracted from the retained earnings, which is an owner's equity account. So it comes out of the retained earnings account, and then when the company is paying cash, it also comes out of the cash account. So the total value of the company will be decreasing when the company is paying cash dividend. So here the company pays, there are 300,000 shares outstanding. Outstanding means these are the shares held by the shareholders. So here on November 30 of 2020, company declares to pay $1.20 dividend. So pay a dividend of per share. So then the company on December 20 of 2020 paid the dividends. Okay, so how much is the total amount the company is going to pay? So the total cash, total dividend equals this 300,000 shares times $1.20. That gives you $360,000. So the company is going to sell out $360,000. So here, on the day of the declaration, so on 11/30/2020, the company is going to debit dividends $360,000 and credit cash dividend payable $360,000. And then the company is actually sending out the dividends on December 20. Now you debit cash dividend payable for $360,000 and credit cash for $360,000. Okay, the next example is small stock dividend. And what is here? The company is paying stock dividend. So if the total shares given out as dividend is less than 20 or 25% of the stock outstanding, it will be a small stock dividend. If it is more than 20 or 25% of the stock outstanding, it will be the large stock dividend. So first, we are going to go over small stock dividend. Okay, so here the problem says a company had 500,000 shares outstanding. So 500,000 shares outstanding, and the company is declaring 15% stock dividend and is declaring on October 1st of 2020. So on this day, the market value per share equals $12, and each share has a par value of $2. Now, the dividends paid on December 10 of 2020. So here, this is a small stock dividend. Why? Because it is only 15% of the existing shares outstanding. So in a small stock dividend, the value of the dividend or the value of the stock given as this dividend is based on the market value per share on the day of declaration. So here, what is the value of the dividend? First of all, how many shares coming out? So shares paid as dividend equals 15% of 500,000 shares. So that equals how many shares? 75,000 shares. And what is the value? The value, as of declaration date, the value is $12. So the value of these dividends is 75,000 shares times $12 equals $900,000. Okay, so now here we have to record the declaration on October 1st and record the payment on December 10th. So now here, small stock dividend. Okay. So on October 1st of 2020. So what do is you debit dividends for $900,000 and you credit stock dividend payable. Now, the stock dividend payable should include only the total par value of the dividend shares. So the par value is $2. Total shares coming out is 75,000. So here the stock dividend payable, you credit it for 75,000 times $2 par value, 150,000. And the remaining 750,000 goes to additional paid in capital. So here, since the company is issuing the stock to the stockholders in the form of dividends, everything goes into their owner's equity account. So they are taking this amount of dividend at the end of the period out of the retained earnings and putting it into these stock accounts. So there's no change, there's no final change in the value of the company. So this is the entry on the day of declaration, and then they're paying on December 20. Now you debit stock dividend payable for 150,000 and you credit common stock for 150,000. Okay, so for small stock dividend, the value of the dividend equals the market value per share on the day of declaration times the number of shares coming out. Now, the large stock dividend. Now let us go to large stock dividend. The large stock dividend will be, the percentage will be more than 20 or 25%. So here, the problem indicates, this is the large, okay, again here, the same, everything else is the same, 500,000 shares outstanding. Now the company is declaring 30% stock dividend. The market value on this date is $12. The par value is $2 and they're declaring it on October 1st and they're paying it on December 20. No change in other information from the previous example on small stock dividend. Now, if the large stock dividend is large stock dividend, then the value of the dividend is based only on the par value. So here, what is the value of the dividend here? So first, how many shares are coming out? 500,000 times 30%. So the company is giving out a total of 150,000 shares as dividend. Now the value of the dividend will be, since this is large stock dividend, the value of these dividend shares is based upon the par value. So total value is $2 times 150,000 shares, $300,000. So here on October 1st of 2020, company debits dividends for $300,000 and credit stock dividend payable $300,000. And then on December 10, they are sending out these stocks. So you will debit stock dividend payable $300,000. Remember, this is only the par value. So everything goes into common stock. Therefore, you credit common stock for $300,000. Okay, folks? So if it's a large stock dividend, the value of the dividend is based upon the par value of the stock. Now, the last example is calculating the earnings per share. So the earnings per share is calculated only for the common stockholders. It is not calculated for the preferred stockholders. So here, the earnings per share for a period is calculated. So here, earnings per share equals the net income for the period minus any preferred stock dividend divided by the number of shares outstanding. Again, folks, what is meant by outstanding? Number of shares held by the stockholders. So now, in the example, your net income equals $900,000 and you have 200,000 preferred stock outstanding And the dividends for the preferred stock is, so preferred stock dividend equals $300,000 and shares outstanding equals 500,000 shares. So now to calculate the earnings per share, you just plug these numbers in the formula. So first, your net income is $900,000 and the dividends for the preferred stock is $300,000 divided by 500,000 shares outstanding, that equals $1.20. So the earnings per share is $1.20. That is the earnings that is attributable or that belongs to one share of common stock is $1.20.
Now we will review the concepts related to the accounting of dividends and earnings per share.
Now, the last aspect is earnings per share. Now, what is an earnings per share? This is the income or profit attributed to one share of common stock. This is calculated and reported in the income statement. This is calculated only for shares held by the stockholders, which we call shares outstanding. So shares outstanding mean these are the number of shares held by the stockholders or shareholders. The earnings per share is calculated only for the common stock. Now, how to calculate the common stock earnings per share? The formula is net income for the period minus dividends that should be paid for the preferred stock divided by the average number of common stock shares outstanding.
Thank you for watching. We hope we were able to help you with an understanding of the accounting of dividends and earnings per share. We have video lessons with worked out problems on all topics of financial accounting. Please do not forget to subscribe.